Hello and welcome to another edition of True Resolve Tax Professionals YouTube channel contributions. I'm Mark Dombrowski, enrolled agent. I am the CEO, manager, owner, everything of True Resolve Tax Professionals. I do have other entities that I also are under the umbrella, the corporate umbrella, Tax Help Associates. So you might see that in some of my webinars and seminars that I'm promoting. Tax Help Associates was started in 1994 and continues to this day. True Resolve Tax Professionals is a sort of more West Coast established representation practice that entered into the fold in the beginning of 2020. Either way, again, I'm Mark Dombrowski. I have 26 years of helping resolve IRS problems, IRS and state tax problems all across the country, coast to coast. At one point, I had 25 offices, all the way from LA to Manhattan to Boston, all the way across, all the way down to Tampa. This little bit of YouTube history is an overall of almost every single resolution I can think of off the top of my head. This is going to be a blitzkrieg of probably 10 minutes or less on offering compromises, payment plans, penalty abatement, innocent spouse, appeals, different things, just so you can get a 30-second snippet of each one of those things and get some of the things, the things that you thought of about these things out of the way. It's very important to have a basic understanding of IRS collections. It's not that difficult, and what I'm about to tell you may shock you. There's a lot of things on the internet that aren't true. Even we can thank Al Gore for inventing the internet, but we can not thank most of these people that are out there, companies, representation companies that are filling the airwaves with mistruths. Yes, believe it or not. Well, you're not going to get any of those mistruths here. First of all, let's talk about penalty abatement. Penalty abatement. That is where you go to the IRS, you're going to be paying them off, probably, or you've already paid them off, you've already paid the taxes, you are established an installment agreement, and that's an important part. The IRS Chapter 20 in the Internal Revenue Manual, IRM, you can go on to irs.gov and look at the Internal Revenue Manual. As I've discussed before, we have the playbook of the IRS, the Internal Revenue Manual. That is online public knowledge. You can get it. Now, Chapter 20 deals with penalty abatement. And there are two main parts of penalty abatement. A, reasonable cause, capital R, capital C, reasonable cause. And B, first-time abatement. Reasonable cause is, and this is an important two sentences, Dear IRS, there was a situation out of my control that prevented me, emphasis, prevented me, an issue, an event, from being compliant, from filing my taxes, from paying my taxes. And I am back. I'm a good boy now. I'm going to be compliant, and I want you to help me by abating or removing these penalties. First-time abatement, FTA, first-time abatement, which has gone through ebbs and waves. The days of it being automatic are over. Somewhere in 2018, the IRS took a much stricter stance on first-time abatement. Let's think about it. First-time abatement. It is, Dear IRS, doesn't matter who I am or what I did, the first period that I owe was the first period that I owed. Let me out of that penalty no matter what. And I'm paraphrasing. It's not no matter what. It's not a given. It's not automatic at all. What it is a policy. The law is you're supposed to pay penalties. Let's get that out of the way too. It's not like, let's make a deal every time. Oh, as soon as I get in a case, don't worry about it. You don't have to pay these penalties. No, not true. Penalties are there to enhance compliance. They're the reason many people pay their taxes, is because if they don't, they're going to get a penalty. First time abatement is, I was a good person, good compliant taxpayer for the preceding 3 periods. If it's income tax, which is most of what people are talking about, income tax, it's the previous 3 periods. It's not the one in the middle. 6 years of taxes, 15 grand each, but the one in the middle, say 2017, you owe 80,000 for. And that's the one you want to get first time abatement on. No. It's got to be the first year you fell off the horse. That's an important feature of first time abatement. They look at your compliance for the preceding 3 periods. I just had one yesterday where I was not allowed on 2017 to get penalty abatement because the person, the taxpayer, the new client, had a $415 failure to pay penalty on 2016. Now I look at, can I get it out? It's 2016. Whip-de-doo. Person doesn't want to hear, oh, great, I got you out of $400 of penalty. They want to hear 4,000, 40,000. They want to hear these huge numbers. Well, I'm sorry, I didn't put you in this situation. When we looked at it, penalties were accrued on a year just before 17. 16 is where you got to do the penalty abatement, first time abatement. So again, in any IRS case, one of 3 things are going to happen, and it might be a combination. You might get number 1 and number 3, but basically, you're going to pay all of it, pay some of it, or pay none of it. Pay all of it. Borrow money against a house, borrow money and pull money out of your IRA, borrow from Uncle Willie, whatever it is, you're going to full pay. Installment agreement, you're going to pay it off over time. That's still a full pay. Okay? Full pay is the first thing. Pay some. In general, that's going to be an offer and compromise. We'll go to that next. Offer and compromise, where you pay some of the liability based on convincing the IRS that they can't get the rest of it from you. Then pay none, you're basically looking at a couple different things. It falls off the 10-year statute. Yes, Congress gave itself 10 years to collect from us taxpayers. Or you can bankrupt, affirmatively, you can bankrupt out of taxes, out of income taxes. Says, I'm not a bankruptcy attorney, so you need to see a bankruptcy attorney who has experience with discharging income taxes. That's important. It's not that I've had plenty of bankruptcy attorney friends who said, oh, taxes aren't dischargeable. Yeah, they are. And like any professional, you shouldn't be taking on clients that you don't know what you're doing with that particular cases, the specific cases situation of that client. I should not be taking somebody who owns foreign property in Germany and wants to depreciate it. Man, I don't know what I'm doing. Every professional needs to stay within their realm. So that's penalty abatement, 2 different ways. There's a reason, and that the reasonable cause they're looking for: floods, fires, deaths, the morbid stuff, the mortal the cancers, the stuff. When I do a penalty abatement letter, it's really kind of morbid stuff, because it's something, when you think about it, that caused a taxpayer to not be able to fulfill basic obligations of filing their taxes, paying their taxes. It wasn't a trip to the park. It wasn't a Disney park. It wasn't a Disney ride that happened. It was something horrible that happened to a family member or themselves, a sinkhole opening up in front of their business, a car accident. So that's what reasonable cause is. That's the main part of penalty abatement. Something happened to me for a limited period of time, and the IRS looks at that timeline. They look at, and it is horrible. The person's wife died in 2018. Why didn't they file in 2013? I know it sounds, again, very morbid, but that's how you got to look at it. The IRS wants to see a timeline specifically to the events that prohibited the taxpayer from complying. And that's, again, all around whether or not it's going to be first-time abatement. Now, offer and compromise. The big OIC, offer and compromise. The big thing that everybody wants. Nobody wants to full pay their taxes. Everybody thinks it's let's make a deal, Monty Hall, all the time. It's not let's make a deal. People, this is a federal program, okay? There are many working parts to this federal program where I have to convince the IRS that no matter what they do to my client, they will not, over the life of the statute, and that's important. Remember, we talked about a 10-year statute, and believe me, I got a 2-hour class alone on the 10-year statute. So I'm not going into that right now. The IRS only has 10 years from each debt assessment date. That's important. It's not just because you owe 2012 that falls off the 10-year statute in 2022. It's 10 years from when you got a bill. So if you file the 2012 return 6 years later, if you file it in 2018, you get a bill in 2018, roughly 2028 is when your 10-year statute is up. Not 2022 just because you filed that 2012 return then. Got it? So it's 10 years from the assessment date. I'm brushing over that because, again, it's a very complicated thing. That's why I get paid the big bucks to calculate those 10-year statutes. In an offer in compromise, we have to convince the IRS that no matter what they do to the client, they are not going to get the money. You basically, in an offer in compromise, you pick the taxpayer up by their ankles and you shake them loose. Disposal value of assets. That's what falls out. You add to that what you would get from a payment plan negotiated with the client. I'm going to say that again. Offer in compromise is the sum of two figures. Net disposal value of assets added to what the IRS would get from a payment plan when they look at your budget and apply their own ceilings, their own rules to your actual budget. So when I'm doing an offer in compromise for a client, I do their actual budget, and then I overlay the collection financial standards, the IRS national standards, which are ceilings for certain categories. I apply those ceilings and see which is going to work. The guy's got a $700 payment on his Lexus, but the IRS only allows $517. They're only going to get in that statement, when we're doing an offer in compromise or many payment plans, they're only going to get $517, whatever that number happens to be. And the rules change all the time on offer in compromises. My rule of thumb, I've been doing this for 26 years, every year there's a major thing in the IRS for either installment agreements or offer in compromises or a combination. Something happens, whether it's innocent spouse, penalty abatement, something big happens, which is great because I always have to keep on my toes because I'm teaching other tax professionals all around the country about what to do when their clients owe the IRS money. That's my gig. I train a lot of mentor a lot of other tax professionals. So I've got to be on my toes because, believe me, accountants always want to be the smartest one, the brightest one in the room. I'm in an industry where accountants want to one-up all each other. It's not like we're good-hearted nurses or teachers that, help people every day. We are accountants, enrolled agents, attorneys, CPAs, who, these are my friends and best friends for decades. But honestly, it's usually a tough audience when I'm lecturing. It's not a walk in the park. Anyways, I digress, as they say. In the offer in compromise, it's not as easy as they make it seem like on TV and radio. It takes months, by the way. It's not. I wish it was just sitting at one negotiating table and I out-negotiate some federal employee. Man, easy money. It's not how it works. You submit that offer in compromise. It takes them at least a month to 45 days to even process it to see whether or not they're even going to accept it into their inventory to put you in line for 6, 7, 8 months. If you owe over $50,000, you got to throw another month on there just because the IRS District Counsel, the attorneys for the IRS, have to rubber stamp, or not rubber stamp, but review the file. They generally have it for a month. Yes, offer and compromises take anywhere from 6 to 10, most of them 10 months, to years. There's a reason why Congress, when they changed the law about offering compromises, put a 2-year maximum on an offer and compromise, because it was taking over 2 years. They didn't randomly come up with that number. That's because things in this offer process are not quick, easy, or anything. Any one IRS employee can deny your offer. but it takes several IRS employees to accept an offer. It's all got to work. The planets have to align. There's so many things in an offer and compromise that can go wrong that none of us anticipate. I'm going to go over quick the rest of these things. Okay, we want to keep these videos short. So I'm going to end at penalty abatement and offer and compromise. I'm going to be right back with the other things that I talked about, and I will see you then. So have a very good day, and remember, penalty abatement's not so easy, not a given. Offer and compromise, not so easy, not just a given. But you're not alone out there. Have a good day.